Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld. Here are three important things to pay attention to for the upcoming trading week. We'll start things off with the boring stuff, earnings. Now last week we had some pretty exciting ones like GameStop. Saw that one melt down on an earnings announcement. This week we have 107 companies reporting. Monday brings us nothing. Tuesday brings us Oracle and H&R Block. So Oracle, obviously one of the major names in the database space. Wednesday brings us Lennar. This is of interest because home builders have been under a bit of pressure recently because of the rising price of lumber and that inflationary aspect of lumber and building homes. So we'll see how their earnings pan out on Wednesday. Thursday brings us Adobe and Kroger, one of the largest grocery stores in the world, which of course sells food, and we've seen food prices rise. So let's talk more about inflation. Last week we talked about Consumer Price Index, or CPI. More specifically, core CPI. And the reason that's important is that's the price that you and I are paying for goods and services. Now, that was a 0.9 reading the previous month. The expectations were we're going to drop from 0.9 to 0.5, a steady drop. We didn't. We came out at 0.7%, so it was higher than expectation. And over the past few months, we've seen spikes that have been much higher than expectation with Consumer Price Index. Now, the goods and services that consumers consume comes from where? Producers, which brings us to our next piece, which is PPI, Producer Price Index. What does it cost these producers to make that basket of goods and services that we buy? Now you notice going back last 21 years, I put a red line in here about 0.5%. Why? Well, you notice that historically we stay below that. Now there have been a couple pops back in around 2008, etc. However, right now on the hard red edge, 3 out of the last 4 readings have been above 0.5%. That's important because if we continue to get readings above that number, then we will most likely see the cost of this basket of goods and services passed on to consumers, which does what? That means more inflationary pressure. That also means that the Fed may have to start to tighten their stance on inflation and make very public what their stance is going to be. That brings us to our final point, which is the Fed. On Wednesday, we have an announcement at 2 p.m. Eastern Standard Time about economic projections and the Fed funds rate. Normally, I would say it's all about that Fed funds rate. That's the most important piece. It's really not this week. Nobody expects them to change at all. It's below 25 basis points. Now, what is of interest at this meeting will be the press conference afterwards. At 2:30 Eastern Standard Time, you get the FOMC press conference. The Fed has been very good about telegraphing their punches for the past few years. Now, if inflation does start to really spike up, the Fed will most likely have to change their stance. They may start to become a little bit more protectionary and cautionary towards this inflation numbers. How do we protect against inflation? You raise interest rates. And imagine our market. If interest rates started to rise, right as we're seeing these all-time highs put in, could really set up for some great trading opportunities. That, my friends, is your Monday Morning Must Knows. We'll see you next week.